Hi, this is the SPX Outlook. Today is Saturday the 21st, and we are definitely now entering the festive season, lower volume. The quadruple witching is now behind us, and the market is still grinding up, actually on a faster pace. Now, what do we take? I mean, last week I mentioned that we had a range, and 3200 was a strong resistance, and of course, the range had to give, and we could, of course, assume that it was a good time for profit taking. It may be surprising for some of us that the market kept grinding, but when the bullish pressure is so strong, we can't really be too contrarian. So here is the weekly chart, definitely very bullish. And if you look, when we entered early December, the February trade, the market was like 160, 170 points lower. This is kind of crazy. It's like 170 is almost like 5% for the month. So this market is exuberant. The market is not following the mixed bag of economic news that we've seen lately. Is it anticipating strong earnings next year? Or is it expecting that the Fed will keep on being dovish on election year? To me, those things are long term and they are not affecting our 1 to 2 month horizon for our trades. So we will definitely gauge the risk as we go along next year. But we're finishing this year on a very strong tone, and what we can only see is that this market may have moved to the lower part or maybe the second channel below. Now testing the one that was broken early December, and will it now go back into the upper channel? It's difficult to say. I would still be very, very conservative and cautious about going too bullish. And as you know by now, the Rhino is not meant to be a bullish trade. We keep it very neutral and we minimize risk. We will see in the other video that fortunately we did refrain from going on the call side just to get more premium. So the trades are pretty safe. So now on the daily chart, we are seeing here that the rand is actually expanding on the downside, which is generally either a quirk that we should not take too much into consideration, or a bearish sign. Of course, there is no bearish indicator from other pieces of information available in this chart, so we just keep this information in the background. From last week, I have moved up the different ranges and support levels up. So now we have the very, very strong support around 2972 to 3000, then 3050 to about 3090, and what was for a while a strong resistance, 3125, which looks like history now, is now the first salient fib between 3125 and 3150. Now this range, and again with that bullish pressure, is now more or less in between those two arrows. So I would assume that the market, if it does congest, will probably get back to the lower part of this channel. So I would probably assume that we will keep above 3150, or we would maybe need to look at a fib on this last leg to see whether there are some potential levels to look at in that range. Maybe it would be better to look at the 4-hour chart to actually draw those possible levels. So it did retrace to about 3070, and now we are around 3225. I assume that because of, even if these lines may be slow to update, we can keep in mind those quantum price gaps, about 40 points. So that's one above 3200. I would say there's maybe something around 3240, which I've plotted here. As a matter of fact, 3125 would be times 3. We add exactly 120 points, which would be about 3245. So this is more or less the next unplotted resistance level we can look at if the market grinds up in low volumes. I mean, this is the market dynamics for the next 2 weeks are going to be a little weird. I do hope that none of you got caught on settlement. I posted on Slack that we always have to be very, very cautious when it comes to assuming that because the market closed the previous day below 3200, and it's you can be very much caught, and the settlement was actually 3231, which can be a very costly mistake. So now if we go to these support levels on a shorter time frame, the 4 hour time frame is definitely the right one if you want to look at the market configuration for the next 2 to 3 days, maybe up to a week. Technically, this kind of analysis should be done twice a week to cover the whole week properly. So we have the first important support levels around 3160. So I would say that there could be, in case of a market consolidation, I would assume there would be buyers definitely coming back to fill the dip somewhere between 3125, 3130. Incidentally, this is also a strong resistance level that very often is tested for support when the market confirms the direction. And it did. It was on the 10th, so a week before last. It did test 3125 and then shot up from there. And now I would say yes, 3125 to 3150 would be the true test level. So I assume this could be a trailing range, not changing anything to the bull trend, all the way down to maybe 3160, 3170. So that's my view for next week. As far as my signals are concerned, there was a profit-taking signal here, and then the market, surprisingly, although it was already quite overbought, turned up again to actually go more overbought. But this is a good thing. This kind of oscillator based on entropy works better when I would call it the elastic is stretched, and you have a much better reversal potential when this signal turns red, particularly when the oscillator is quite high, near 100. So this was more like a profit taking and going back re-entry long here, which is only a small triangle because one should reduce the risk when the market's so high. I mean, there's always a chance that. So I would say this was a very good entry and this was a profit taking. And if I was to re-enter here, I would re-enter on a smaller size. So finally, a look at the 1 hour chart. 1 hour chart has shown that the 3204, let's say 3200 was a strong resistance. It's difficult to say whether this was a settlement anomaly and that the market will come back to its senses sometime next week. That's also possible. Sometimes you see excursion above a resistance level, and as a matter of fact 32 to 3220, it's half of those important price gaps, although sometimes you get a narrower range attached to a faster time frame. In this instance, the 40 point gap is still the same, 30, 3125, 3165, 32. So again, my next target, if the market keeps grinding, would be about 3045. The levels are the same, and it's very often the case when the market is trending in all time frames. So I would really go with the flow and be conservative if you are a market neutral trader, not to take too much risk on the upside. We don't know when this grinding will come to an end. Volatility has been low, holding around the 12 level, so it's not as bad again as it has been a couple of years ago. That means that we should keep, for those who are Vega negative, short Vega, we should be careful that, of course, there could be a strong resurgence of Vega if the market turns around. So we have to be cautious on the downside. But VOMA is not astronomical like it was early 2018. So I would say that even if you keep a prudent approach as a market neutral trader, there is no indication that, especially for my trading style, there's no risk either about the market falling hard and Vega being bumped up from one day to the next. So I would say that if you're not too afraid of a drawdown, you can push your shorts to the 3125, 3160 area. You may be caught if the Vega comes back strongly. And if you want to be a bit more cautious, I would say place your structures a bit below. If you are more concerned about a possible drawdown, keep your Vega low because this kind of market can be quite treacherous. Right, I'm actually digressing on topics I shall explain better in the other video. Okay, so that's it for now. Like last week, the levels, at least on the support side, are well identified. And again, the next video will be posted shortly after 8 a.m. UK on Monday. And I will maybe also introduce a few ideas about hedging because now that we are in close to a market top, this is actually a good time to play some hedging trades in the form of maybe just long puts if you want to keep it simple, or maybe a put back ratio. And for those who would like to keep it simple also, but also softer and probably more cost effective, one may look at a risk reversal trade, but we always have to be careful of the call credit spread side that must be placed at least one SD away from the money. Okay, that's it for now. I wish you a great weekend. And also, of course, for those who are not on Slack, I wish you also all the best over the festive season. Bye for now.